By the way, the stock on our radar right now is Coforge, and it's interesting because at a time when Infosys has actually cut their guidance, Coforge has maintained their FY24 revenue guidance of 13 to 16%. So at a time when all IT stocks are under pressure, Coforge is actually up almost 0.5%. But the margins contracted by almost 400 basis points sequentially, but a big jump was seen in order inflow, which is up 76% sequentially and 69% year on year. And as I said, the most important part is the company has maintained their guidance. Sudhir Singh, the CEO and Executive Director of Coforge, joins us now to talk about that. Mr. Singh, good morning and thanks for joining in. I wanted your view on what's happening in the industry after Infi's numbers. So Infi saying that, discretionary spends are lower, timelines are getting delayed for the start of deals. Is this an Infosys-specific issue, or do you think that this is something that the entire industry is facing? And in that context, would it be tough, you think, for you to maintain your full-year guidance?
Well, let me take the questions in reverse order. We feel absolutely confident, and I mean this emphatically, absolutely confident that the guidance that we've given is rock solid. We don't see it, and we've stress tested it multiple ways. We just don't see any scenario in which we're going to miss our guidance. 13 to 16% constant currency growth this year is something we will deliver come what may, and our confidence has only gone up after our performance in quarter one. 2.7% sequential growth in quarter one came on the back of 4.7% sequential growth in the previous quarter and 3.7% in the quarter before that. So given where we stand today, year on year, we're growing almost 18.5% in CC terms, quarter one over last year, quarter one. We feel rock solid about the guidance that we've given. That we will deliver on come what may. As far as the macros in the industry are concerned, I guess there's no denying the fact that the macros are uncertain. Demand is depressed. So that's the macro scenario. Specific to us, we think we've proven to ourselves, even in this quarter, even in a vertical like banking financial services that is significantly stressed, that not only can we grow, but we can sign large deals, and we have signed a $300 million TCV 5-year large deal in BFS itself. So that's how I would posit it. Macros continue to be uncertain, but do we feel confident that we will deliver the growth that we've talked about? The answer is an absolute, emphatic, clear yes.
When we speak with investors on IT, the only thing they talk about is this large looming uncertainty on the macros. And we'll come back to numbers in just a bit. But just to press on that point a little longer, sir, take Infosys' case, right? They made investors, I think on the 29th of June, 28th of June, I think, and the reported numbers on the 19th of July. They were sounding absolutely confident back then. Nobody changed their numbers, estimates, etc. And then, of course, we saw what happened yesterday. Of course, it could be company specific. It could be a client, two clients. Is that a risk that you see? Something similar? You're sounding very confident that you will do what you promised, but just to take on that point.
Well, let me put it another way. We've delivered on everything that we promised over the last 6 years. The guidance that we've given every year is a guidance number that we met without fail. As we speak right now, the view that I have, the view that the firm has, is a grounds-up view. We're not just looking top-down from a macro perspective. We're not just looking at the fact that we are already 18.5% CC YOY higher than where we were at the same time last year. Looking at the orders that we've already signed up for the next 12 months, which is what we call an order executable, that's already at $897 million. That's 19.1% higher than the same metric, order executable, 12 months back. So our confidence doesn't come, and of course I can't comment on Infosys and the circumstances therein, but our confidence comes from a grounds-up build, from conversations we've had with clients, from contracts that are signed up, and from the fact that every time there's been a consolidation opportunity within our client set, we won. So in our case, large deal velocity is unimpaired. Last quarter proves it. The previous quarter proves it. Quarter 3 last year, we actually had 5. So that large deal velocity is unimpaired. Large clients, top 10 clients, continue to drive growth. We continue to be on the right side, like clockwork, of any consolidation that's happened. Hence, The confidence comes from a grounds-up build. 13 to 16%, as I said, is something we feel absolutely confident about. And this isn't just us making an assertion. We have a 6-year record. If you look at the order executable number that we declare every quarter, and you tally that with the actual revenue that Coforge has realized in the subsequent 12 months, you will find a very strong correspondence. So this isn't just a forward-looking statement with no basis in history. 6 years, 24 quarters, our record bears the fact that we deliver on the estimates that we provide, and we feel extremely confident, and I guess I've said that a couple of times already on the call.
Well, you're saying it as it is, Sudhir, and I can feel that confidence in your tone as well. So let's talk about a couple of other aspects then. You're in that journey to move from $1 billion revenues to $2 billion odd. And, there is some kind of expectation that there will be some M&A activity. Could you tell us when you're going to move on that front, point number one? And also currently the promoter entity is the PE, Bearings. And they have brought down stake from around 50% to around 26% odd. Now you're leading the firm. Have you heard anything from them?
Let me just address the first question, which is the M&A activity. I want you to know that we are very keen, incredibly keen to make sure that we do acquire in areas of interest that we publicly called out. So anything around data, anything around cloud, anything around low-code, no-code, or a new sector like healthcare would be of great interest to us, is of great interest to us, and we have active conversations going on. Nothing that I suspect is going to close very, very soon, but we are clearly extremely interested in using acquisitions as a strong prong for getting from $1 billion to $2 billion with great speed. That's the broad intent. Really no comments on the promoter stakes. BPA has been, they've been fantastic supporters, fantastic advisors over the last 4 to 5 years. The management team continues to focus on performance. We've created our next 5-year roadmap, and we feel very, very strongly that the next 5 years will continue to be very strong growth years.
So, I want to ask you about what's happening in the BFSI space, because earlier you had mentioned that there is some caution over there. 30% of your business comes from BFSI, and your larger peers like Infosys have also talked about how there is a slowdown there. What kind of growth rate are you seeing in the BFSI space for your own business, and will it be slower than what we've seen in the preceding years?
It's likely to be slower than the kind of growth that Coforge has charted out, but the growth that we've charted out, if you look at us, has been, I would call it abnormal compared to industry growth rates. Last year, our BFSI business grew 45% over the previous year. There's been a 7-quarter stretch where the Coforge BFS business has grown double digits sequentially for 7 straight quarters. From that growth rate, we expect it to moderate. This year, we called it out earlier, we would expect our BFS business to moderate and get back to the company growth rate of about 13 to 16% in the current year. This quarter, BFS grew 3.3%. The previous quarter, it grew 5+%. For the year, we expect the BFS business to be somewhere around the 13 to 16% CC YOY growth, FY24 over 23.
So this 13 to 16% compares to what on an average in the preceding years? I didn't get that.
Last year, BFS grew 45% for us, and it was the clear outlier. This year, the travel vertical has picked up significantly. Insurance has picked up significantly. BFS has moderated. Overall, the firm, therefore, as a consequence, will deliver the 13 to 16% that we talked about.
Okay. All right, we'll leave it at that. Thanks a lot for joining us and speaking about the business and more importantly, the industry and what's going on there.